Well, we always worry about something. We talk about this all the time. I worry when we don't worry, because that means we're so totally complacent. But I think it really is that we're into the seasonally strong period of the year for the markets, the fourth quarter. We're past the volatility in August, September, and the beginning of October. And now you get earnings, and earnings are coming in quite strong. Now, we not only are earnings coming in strong, but you still have an enormous amount of liquidity, Sarah. You know this, 47% of the GDP in liquidity, and that's enormous, right? And that's not going away overnight, even if the Fed tapers. Interest rates are rising. I think they're rising for the right reasons, because there's better growth and more inflation. We do root for a little inflation, by the way, not a ton. I don't think we're going to have a runaway inflation, but we're going to have pockets, and this is what the companies are talking about during earnings season so far. And then most importantly, the biggest part of the economy is the consumer, and they're doing just fine. Retail sales have been very strong for the last 2 months that not a lot of people are talking about. Housing continues to remain strong. Manufacturing, all these companies this week did a really good job in terms of talking about demand being there and having some problems on the cost side. But we've talked about this, too. You have the haves and the have-nots. And those that have pricing power are going to do just fine. Dow, Procter & Gamble, J.B. Hunt, Dover, Union Pacific are just some examples of pricing power companies. Those are where you want to have exposure. And then also, you want to have exposure where you don't have to worry about this when you look at something like an Abbott or United Healthcare or a J&J. So diversification across the board still remains the key.